Evening, everyone. It's 5:45, and this is your closing comment. It is video number 842 for Thursday afternoon, July 8th. And I always remind you, if you enjoy the work, please hit the subscribe button. Okay, so we started off with a bunch of news and a very weak market. Today was Thursday, so it's claims day. Initial claims were up 9,000 at 373. Continuing claims, on the other hand, were down a little at 3,339,000, but only if you don't include the adjustment that they made last week. Consumer credit, on the other hand, was up 35.3 billion. Expectation was for 19 billion. And last month's 19 billion was adjusted up by 20 billion. So this is the highest number since December of 2010. And frankly, that's not a good sign. Everybody was supposed to be saving and credit rebuilding and balance sheet rebuilding, and here we have the highest consumer credit in 21 years. We also had news from Japan based on COVID. They weren't going to allow any foreign spectators. Now they're not going to allow any spectators. So that put a real crimp in the market on the basis of questioning the viability of a coordinated worldwide reopening. And as I've mentioned in the last couple of weeks, and this week in particular, that of everything that I saw on TV in sports, from Formula One racing to Wimbledon, outside the U.S., everybody is wearing a mask. Inside the U.S., nobody is wearing a mask. So we'll see how this Delta variant breaks down, but I'm sure it won't be pleasant. Certainly won't be pleasant for anybody who gets sick. Okay, so the market opened down at the low. Early on, it was down 536. It finished down just less than half of that, down 259.86, and that was down 0.75%. The market internals were 3-to-1 negative. Early this morning, they were 95% down. That's 19-to-1 negative. NASDAQ was down 300 at the low. It finished down only 105.72. And over there, it was just less than 2-to-1 down. Volume was roughly unchanged. The S&P closed down just half of what it was down. It was down 70, finished down 37.31. And the Russell, which is now down just short of 5% in the last 6 trading days, was down 21.17. Transports were down almost 500. That's 3.28%. And our beloved half-senile president decided that shipping, both rail and overseas shipping, deserves a look for competitiveness, where, especially in the rails, the chance to negotiate a price for areas that are underserved, where you don't have an alternative, ought to be changed. I have a thought. I can't get from Connecticut to Manhattan without going over a bridge that costs me $18. How about using that anti-competitive jackass. Okay, the Dow Jones was 24 down, 5 up, and Cisco unchanged. The big losers were Goldman Sachs down 58 Dow points. One of yesterday's big winners, Home Depot, down 31 Dow points. The only double-digit gainer on the Dow was Boeing, up 33 Dow points. But there was some really bright spots. Amazon, for example, this morning was down 74 after being up to a new all-time high yesterday. The stock was down 74, turned up, and ran to up 62 and closed 3731.41, up 34.83, or 1% at another new all-time high. Tesla, which has gotten batted around a fair amount of late, was also up, only 1.3%, closing 652.81, up 816. The China stocks were horrendous, as were the new China IPO'S. Alibaba closed a shade over 200, down 7. Baidu closed 176 and low change, down 650. DIDI made a new low today at 11, closed 11 and a quarter, down 66 cents, and that was 5.5%. And CPOP, which I mentioned yesterday, was 20, down $6.26. And NEGG, NEGG, I mentioned that one yesterday and this morning, traded from 6 to, I believe it was 79, closed the day today 45.5, still up pretty nicely, but down 22 today, or 33%. The meme stocks were the only one of the 11 sectors that I follow, was the only one that was positive, mixed to positive. But we had some action like the Amazon in AMC. It opened lower, went down 7, and then actually closed up 5%, up 2.25. And Space, SPCE, Virgin Galactic, started the day, has been down hard the last couple of days, and was down 2 and finished up 7, or 16%. We're getting awfully close to Mr. Branson going into space. In the futures, the chart on the screen is the gold, which has now moved in the last 7 days from 1750 to today's high just under 1920. That's a 4% move in the raw price of a commodity, which is substantial. Today, it closed just slightly lower after opening up and hitting a new recovery high here of 1819 and a half. We closed down $1.90, which frankly, after a $70, 4%, 7 trading day move, is really not much of a pullback. If it holds here, I'd be very pleased with it. As you can see, the purple line going up has, as I mentioned yesterday, was going to, today has crossed up through the 100-day moving average, which is bullish. We're now headed to this blue line, which is the 20-day. And, it looks to me, if it runs into more trouble here, wouldn't surprise me in this 1840 area, but that will really be a nice gain for us. The oil was another one that opened down and went down. It made a new pullback low of 70.76 today, finished on the high. Now, if you recall, in this morning's video, I specifically said when the oil was still down on the day but had made a lower low, I said this is a perfect setup for down, new low, reversed, up, which is exactly what we did today. This was really a thing of beauty. Down to up. And when we said that, it was right around here. This little line to the left here is where it opened. So it opened, went down, and then turned back up and closed pretty darn close to the high. The high for the day was 73.26. It closed 72.94, up a little over 1%. So really nice action there. Bitcoin was down 1740, still holding pretty well in there around that 32,000 level, which would really be pretty firm, I would think, and possibly define a new trading range for it instead of the below 30. I know 30 to 32 doesn't really seem like much in something that trades the way that this does, but if we have a trading range here instead of down here to 28,800, then we could be setting up to try 36,500 and then 40,000 or 39,000. So we'll see how that holds up. The dollar was down 24 cents, 92.40. And one that has not worked out particularly well for us, it's not a big loss, but it is not a gain, is the bonds. We are long the TBT, which is short bonds, long interest rates, because I expected it to spike. It closed a full point off its high, but still up 21/32, so roughly 5/8 of a point. I would expect tomorrow we're going to see it test down here at this 162.5 to 162. And frankly, it's not much of a loss. I think that we're out about 10 cents on a 4-contract position. That hardly is a concern to me. All right, everyone. Tomorrow, China, CPI, and PPI, and everybody will look at that. Industrial production for the UK, Italy, and France. I don't know if anything aside from the UK really makes much of a difference, but we will see, and I will be back first thing in the morning. And I remind you, it doesn't take any effort to hit that subscribe button, so do it.